Today we're going to cover how to successfully trade this flat and sideways market. We'll cover short put spreads, short call spreads, premium collection, pivots, gaps, and TTM momentum shifts. Let's look at the first trade, which was made on the basis of finding a daily resistance using pivot points. First off, what are pivots? Well, pivots are a way of calculating various support and resistance levels, and they've been used for a very long time. So when we want to find support and resistance, we need to see what the chart is telling us. If we go back further, we can see again just above the 319 is rather important. So what we can do is we can take some of these wicks up here and draw a line. And I actually did that previously. So if we take this line and mark that that is an important support and resistance line, we can see why someone might think that as we move into this line that might mark a potential resting point, a potential top for the day or thereabouts. Now, I mentioned pivots, and there's actually a really cool built-in pivot calculator in Trading View right here that you can click. And if you just go into the indicators and select pivot point standard, you'll get these pivot points actually automatically calculated for you. And as you can see, the pivot point actually did a better calculation. It ended up with a better result than just looking for previous support and resistance like I just was doing. So I'll go ahead and turn my line off here for a moment to declutter a bit. And just a quick note on pivots, if you're curious how these are calculated, this is the calculation right here. So you have your standard pivot point, which is the previous high plus the previous low plus the previous close divided by 3. And then you have your support and resistance pivots. So another quick note on the pivot points is you'll see that there's the support pivot points and you see the S1 and S2. There's also the S3 and the R3 pivots, and the way you should really just think of these pivots is you'll oftentimes hit the pivot itself. You'll regularly hit the support 1 and resistance 1. You'll sometimes hit the support 2 and resistance 2, and you'll rarely hit the support 3 or resistance 3. And if you do, that's probably a good exit point to consider your next trading setup. Alright, back to trade 1. But as we came into this pivot point, I decided to take a trade. And what I did was I sold a short call spread to open. And so what that means is I sold the 319, which had 78 cents of premium, and I bought the 321 way up here with 10 cents of premium. I risked $2,640, and the idea here was if we were trading sideways or down, I would profit. Now these were 0 days to expiration strike options. So with 0 day to expiration options, that means that, they expire right here at the end of the day. Technically, actually, they expire 15 minutes after the close, and I'll talk about a little bit why I didn't hold after the close to get the free trade. And what I mean by a free trade is when your options expire, you're not charged a commission for that expiration. And if they expire worthless, which in the case of a short call spread, we want these both to expire worthless ideally, because then we can collect the maximum premium. But also if they expire worthless, we do not have the closing trade commissions to deal with either. And of course there are some brokers that offer free options trades or commissionless trades, but of course they are also biting you with their spreads typically being worse for you. So you sort of are paying for it one way or another. But if you look here, this trade actually was successful even though we traded sideways for over 3 hours here. It was only here in the last the last about 20 minutes of the day where this trade became profitable, like truly profitable. In fact, there was moments here in the red where, I was a couple hundred, a few hundred in the red, but I stuck with the trade because I did see that our TTM squeeze indicator and momentum and stochastics were all heading down right at the moment that we had that little spike. And so I figured it was probably the market makers, the market's just clearing out some stops, and sure enough, that's what it turned out to be. So how this trade went down was in the last 20 minutes of the day, I made a decent profit. Tesla was going to report earnings after hours, since that can move the market a fair amount, and since I was only 30 cents or so to the positive into my trade, in the sense that, we're expiring at the 319 strike. 30 cents is not a whole lot. Even with the 15 minutes after the market that these index options trade, those 15 minutes, I have definitely seen more than a 30-cent move before. And so I did want to lock in those profits before the market closed and before Tesla reported earnings. I did somewhat expect Tesla to do what it did. I was concerned that, should I be wrong, that it would blow this trade up. So that's why I closed it. So we're going to cover 3 trades. So I have 2 more to show you. But the beauty, by the way, of this one is this premium, the 78 cents, was decaying the whole way. And so by the time this little spike up here happened, I was actually profitable. Because see, we're at 56 cents. I was still profitable even at the peak of that spike. And so I was feeling pretty good about the trade still. And, so that's the beauty of the short call spreads and the short put spreads that I'll show later, is that you're gaining the premium from all the theta decay. And with 0 day to expiration options, that theta decay is happening rapidly. Okay, well, let's take a look at trade number 2. So the first trade of the day was first around the gap close. So this one really didn't rely as much on pivots. This was just a scalp, but same idea, only instead of using calls, we were using puts. I put on a few more because I was a bit more confident in this trade. Here we sold a 317 strike put for $1.28, and we bought 315 strike puts for 45 cents. We were actually only risking $680 with $4,000 of margin, because the strikes I selected were already in the money, and due to the volatility of the market, the spread was peeling. So as you can see, in a period of 9 minutes, we were able to get this partial gap close and profit over $1,000. There was, on the 1 minute chart at the time, it was starting to roll over pretty hard, and that's what got me out of the trade. Of course, had I stayed in the trade, that would have been a much larger profit, and as you can see here, we got to within just a few cents, couple cents of hitting the pivot right here, which would have been, if we're trading pivots correctly, that would be the place that we should have closed. So now let's go to my 3rd trade of the day. So now that we're going to again be doing a short call spread. So what got me into this trade was not a pivot, because the pivot's way up here, down here. What got me into this trade was the TTM squeeze momentum rolling over. So when I saw the light green bars turn to the dark green bars, I figured this move was probably over. Likewise, this was the resistance that we were talking about earlier, from the prior day. And so even though it wasn't an official pivot for this day, I use the prior day's pivot as an indicator of perhaps hitting a top for this move. And so I entered this trade with a short call spread. We sold the 318 0 days to expiration strike for $1.15 at the time, and then we bought the 320 for 15 cents. So we sold the 318 and we bought the 320. And the idea is we want, again, these two to go to zero, both of them. And at most we could profit $1, right? The delta between these two is $1. And $1 times 2,000 is a $2,000 profit. We were also, by the way, risking 2,000. So if this were to have closed the day at over 320, then we could have lost $2,000. That being said, as you can see here, I did put a stop at just above the prior day's pivot. So we in reality, we're not going to risk the full 2,000. And then, as we can see, this performed nicely. We did roll over today and had quite a violent move down. We were approaching some of the prior day's pivots, and at this point, I had profited $1,500, and with being in the trade 45 minutes. Now, obviously, we could have let this go a little bit further and eked out maybe another $200, $250 by the time it got down here. But, having made 75% of the possible earnings for this trade in under an hour, I decided to close it while it was kind of screaming down. And the other thing you get there is the momentum kind of overshoots the pricing on the options a bit when it's moving that fast, because people are anticipating this move. So you kind of get a little bit of that move for free just due to the velocity built into it, if that makes sense. So yeah, that was a quick trade, a good trade. And as you can see, we did have these pivots work out. If we were trading strictly on pivots, we could have set up a short call spread here and closed it out down here. We could have set up a short put spread here and rode it up here. And this is where you kind of want to mix indicators too. Never really necessarily rely on one thing, but you can see how the pivots are very valuable, but also these oscillators, like the momentum shifting here, can also be quite powerful. And as you can see, there's no pivots here, so you do have to understand what you're looking at and when to use which indicator. Certainly sometimes these indicators can be messy too, right? So like this indicator shows the momentum dying here, yet if you were to have started a short position here, that would not have been very successful, right? So part of it is seeing how violent the move is, looking at other pivots, prior days, and then adding into your trading confidence with some of these momentum indicators and things like that can help indicate if the market is truly turning over. In fact, one of the other reasons that I took this trade was I was paying attention to the advance and decline, and it's the ADD or the $ADD, depending on your trading platform. And you can see that the advance and decline actually did roll over as I was entering that trade as well. And so when you get a couple bars here and this starts rolling over, that tends to mean typically that the market is starting to roll over. So with the market rolling over, that made for a successful trade. Of course, were these trades the absolute best trades? No. Could they have been better? Absolutely. Am I happy with the results? 100%. Tell me in the comments below what's been working for you, and happy trading.